right, let's just jump right into it. If you had your eyes on the market today, there's one name you just couldn't miss: Happiest Minds Technologies. After a really tough year, this thing just, well, it exploded. So we're going to break down exactly what happened, why it happened, and what it all might mean.
I mean, first off, just look at this number, over 18% in a single day. That's not just a good day, folks. That's a massive, massive statement. A move like that, it makes everybody stop and ask, what's going on?
And get this wasn't some random little blip on low volume. Nope, this surge was powered by some serious trading activity. We're talking huge interest from the market, which is usually a sign that something big, something real, is happening under the surface. So yeah, that's the big question, right? What on earth just happened here? A stock that's been trending down for a year doesn't just slam into reverse this dramatically without a powerful reason. There has to be a catalyst. So let's dig in and unpack the whole story. Okay, so to really get how big of a deal today was, you have to know the backstory. Happiest Minds has been having a rough go of it. I mean, it's been down big time over the last year. So today wasn't just some nice green day. No, this was a full-blown explosive breakout from a really long slump. And check this out. This is where it gets really crazy. Look at the volume. That little bar, that's your average day. And this massive skyscraper next to it, that's today. Over 16 million shares changed hands. This chart tells you everything. This wasn't just a bunch of small investors getting excited. This is the big money, the institutions, stepping in. So what was the spark that lit this fire? Well, it all boils down to one thing: a huge announcement from the company's leadership. And it's all about their massive bet on the future. You guessed it, artificial intelligence.
What they did was pretty smart. They basically gave the market a three-punch combo of good news that completely flipped the script. First, they came out with new, much stronger guidance for growth. Then, they basically said, hey, that AI strategy we've been talking about, it's working. It's really paying off. And to top it all off, they set this incredibly ambitious new target for the future. I mean, what a trifecta, right?
And here's the key part. It's not just empty words. They're putting their money where their mouth is, investing heavily in people. They're planning to double their specialized generative AI team from 250 specialists now to 500 by fiscal year 2027. That is a real, tangible commitment. It shows the market they're serious about building the brainpower to actually pull this off. And here's where all that talent is going. You have the CEO himself confirming that their whole AI-first strategy is hitting the mark. They're seeing robust adoption, his words, with big clients in finance, healthcare, manufacturing, you name it. So AI isn't just a buzzword for them anymore. It's becoming a real moneymaker.
But, and there's always a but, isn't there? This is where the story gets a little more complicated. Because while everyone's excited about the future, if you look at their most recent financial report, it wasn't all sunshine and rainbows. We've got to peel back the onion a bit to see the whole picture.
So you've got this weird situation. On one side, they had their best revenue quarter ever. I mean, fantastic, right? But then you look at the bottom line, and net profit, well, it actually dropped by almost 20%. So what gives? It's a bit of a puzzle.
Okay, so why did the profit dip when sales were so good? It really comes down to the cost of growing. They're spending more on their people, to get and keep all those top-tier AI experts we were just talking about. Plus, they're dealing with higher interest costs. So it's a classic case of you have to spend money to make money.
All right, let's take a step back. We've got this massive stock surge, a really exciting story about their AI future, but at the same time, some pressure on their recent profits. So how do you square all that? Does today mark a genuine turning point for the company? This little scorecard here does a great job of laying it all out. Short-term momentum? Oh yeah, it's through the roof. But let's not forget the long-term trend is still pretty weak. Remember, the stock is still down about 45% over the year. Profitability? Well, it's a work in progress. They've got to get that sorted out. And here's the kicker. Even after this huge jump, the valuation is actually still looking kind of attractive compared to its peers. Interesting, right? And so it all comes down to this one final question. Today, the market voted with its wallet. It basically said, we believe in your AI story more than we're worried about your short-term profit dip. But the real test is what happens next. Is this the start of a genuine, sustained comeback, or is it just a one-day sugar rush fueled by AI hype? That is the billion-dollar question everyone's going to be watching from here.
Have you ever pulled up a complex financial chart, looked at the price action, and just felt like you were staring at some kind of alien language?
Oh, absolutely. Or, like one of those really confusing medical monitors in an ICU where everything is just beeping and flashing red.
Yes, exactly. Just jagged lines and colorful bars everywhere. But if you trade, you probably know that feeling when you look at a chart and suddenly realize you were staring at the scene of a financial crime.
Right. You see the brutal aftermath of the slow, agonizing bleed, and then boom, a massive, violent intervention by institutional money.
And he just flips the whole board.
Yeah.
And you're left scrambling to figure out, wait, is this a genuine reversal or just another incredibly sophisticated trap?
It's the ultimate puzzle, really. I mean,
Yeah.
we spend so much time looking at fundamentals and earnings, but at the end of the day, price action is the only truth that pays.
Yeah, and if you live for decoding that exact moment of market psychology, that sudden shift from fear to greed, then you are in the right place today.
Because what you are looking at on a highly active chart isn't just, a record of transactions. It is the physical footprint of human emotion.
Exactly. The raw data of fear, greed, and aggressive money moves. So let's unpack this. For today's deep dive, we are focusing on one specific, highly detailed source.
Just one chart today, right?
Just one. We've got a single screenshot of a daily candlestick chart. The stock is called Happiest Minds, trading on the NSE, the National Stock Exchange.
And we're looking at this through the lens of a Nuvama platform terminal, judging by the watermark on the screen.
Right. So our mission today is to tear this static image apart. We're going to translate all these jagged lines and mysterious acronyms into a gripping story.
We're going straight into the microstructure of how a grueling, months-long distribution phase finally hit absolute bedrock.
And how we can actually see the exact moment the big money decided the selling was over. Remember, we aren't just reading numbers here.
No, we're uncovering the hidden story of human exhaustion captured in the data.
So let's get right into the timeline. I want you to draw your attention to the bottom axis of the chart, starting way over on the far left.
This would be back in late August.
Yeah, late August. And up at the top right of the price scale, Happiest Minds is hovering pretty high up, near the 570 mark.
It looks relatively comfortable there.
It does. But then we track this trajectory. We go through September, then October, November, December.
Just a grim picture.
Straight through into the new year.
Yeah?
You can actually see the 2026 marker right between the D16 and Jan 19 labels.
And it is a textbook, relentless downtrend.
It's a bloodbath. But it's not a flash crash, is it?
No, not at all. A flash crash triggers a quick panic and then usually a fast bounce. What we have here is much more destructive to an investor's psychology.
It's a grinding, algorithmic bleed. If you look at the visual elements, it's literally a persistent staircase of red candles.
Lower highs and lower lows, perfectly contained.
And let's talk about those moving averages. You see the red and green lines smoothly sloping downwards right over the price action?
Yeah, those act like a heavy ceiling.
Every single time the price tries to push up and catch a breath, it hits those lines and just gets swatted back down.
It's basically dynamic resistance. The algorithms are programmed to sell into every minor pocket of hope.
It's like imagine slowly letting the air out of a balloon, day after day. By early March, the price has completely collapsed down into the 330s.
A massive haircut from 570.
Just imagine the psychological toll of that for an investor, watching an asset you own slowly drain in value for 6 straight months.
It's designed to force capitulation. By the time it hits the 330s, anyone holding from the 500s is probably facing absolute despair.
Right, the order book on the buy side must have been a complete ghost town.
Exactly. And this brings up market structure. The market makers know exactly where the retail pain threshold is. They let it drift down to trigger stop losses.
Which brings us perfectly to the anomaly, because here is where it gets really interesting.
The turning point.
Yes. We pivot to the very right edge of the chart. Right around that 06 bar marker,
March 6th.
the slow, agonizing staircase is violently interrupted. We suddenly get this massive, towering green candlestick that just dominates the entire right side of the screen.
It's an explosive plot twist in the data.
Let's break down the specific numbers for that data drop. If you look neatly printed at the top left of the screen for this final green candle, we have the OHLC.
The open, high, low, and close.
Right, so O is 346.00, H is 405.50, L is 338.00, and C is 402.40.
So let's patiently synthesize what those four numbers actually mean for the story of that single day.
Walk us through it.
Well, a stock opens at 346. But then it actually dips lower, down to 338.
A drop of 8 points right out of the gate.
Exactly. And that drop to 338 is critical. That is the capitulation wick. It's shaking out the very last exhausted sellers.
Because 340 is a round psychological number, right?
Right. You can guarantee there is a cluster of retail stop-loss orders sitting right below 340.
So they flush the price to 338, trigger all those stops, and retail panics and hands over their shares at the absolute bottom.
And then the buyers take over with furious energy.
They drive the price all the way up to a high of 405.50.
A massive intraday swing. And it doesn't just spike and fade. It closes near the very top at 402.40.
The visual impact of this is just staggering. It's a single green bar, but it cuts right through that descending red moving average line.
That same line that had been acting as an iron ceiling for months?
Yeah. It didn't even act as a speed bump this time. A single day of trading practically wiped out weeks of previous slow losses.
It's a complete regime change in the order book.
But, we've all seen charts where a stock spikes, everyone screams trend reversal, and 3 days later it's making new lows.
A bull trap.
Exactly. So looking at the price action alone, it's just a claim. We need to look below the surface to see if this is real.
And that means looking under the hood at the indicator panels at the bottom of the screen.
Let's start with the very bottom panel labeled volume. Because the discrepancy here is wild.
It really is.
For 6 months, the volume bars look like tiny blades of grass. We are talking average daily volumes hovering around the 93K mark.
Highly illiquid.
But on that final March day, there is a massive, towering green skyscraper of volume.
Look at the scale on the right of that panel.
Yeah, it jumps from around 93K all the way up toward the 98L mark. 98 lakhs. That's 9.8 million shares in a single session.
What's fascinating here is that volume is basically the lie detector of the stock market.
How so?
Well, a price jump on tiny volume is often a fluke. It's just noise. But a massive price jump accompanied by a skyscraper volume bar, that means serious, heavy-hitting money has suddenly rushed in.
Retail traders do not trade 9.8 million shares of a mid-cap stock on a random Tuesday.
No, they don't. This gives the price move real conviction. It's institutional block trading.
And it connects perfectly back to that morning drop to 338 we talked about.
The liquidity event.
Right. If a massive fund wants to buy 9.8 million shares in a market that only trades 93,000 shares a day.
They drive the price up 200% against themselves just trying to fill the order.
Exactly. So they need a massive influx of sell orders to match their buys. And by flushing the price to 338 and triggering those retail stop losses, they engineered that liquidity.
They absorbed all the panic selling to fill their bags and then let the price rip.
It's brilliant and ruthless.
Yeah.
But there is another layer under the hood we need to look at. The middle panel.
The RSI, the Relative Strength Index.
Right, RSI 14. Let's talk about the slingshot effect here.
So RSI measures momentum, and if you look at the jagged white line leading up to March 6th, it had been just languishing in the basement.
It was dipping dangerously close to the 15.0 mark.
Which is extreme. Anything under 30 screams oversold to traders, but pinning near 15 means the selling pressure has exhausted itself to the point of absurdity.
That's like a rubber band stretched so far it's about to snap.
And then suddenly it does. On March 6th, that RSI line violently hooks upward.
It executes this vertical slingshot, slicing straight past the 45.00 level.
It's a compressed spring finally snapping back into place.
The velocity of that RSI move, backed by 9.8 million shares of volume, validates everything. It's not just a dead cat bounce.
No, it is a fundamental repricing of the asset. They market bought the stock right out of the basement.
So what does this all mean? We started today with a single screenshot from a Nuvama terminal. A static, confusing jumble of red and green tracking a stock on the NSE.
But we translated it.
We did. We read the story of extreme market pessimism turning into violent optimism over the course of a single trading session.
We tracked a 6-month algorithmic distribution phase that just destroyed capital.
And then we dissected the capitulation. That brilliant morning flushed to 338, a manufactured liquidity grab.
Verified by a towering 9.8 million share volume skyscraper.
And confirmed by a violent momentum slingshot in the RSI. This is why you should care about this stuff. Because you are walking away from this deep dive with a new superpower.
You really are.
The next time you look at financial news or open a stock app, you won't just see a squiggly line.
You'll know to look for the open, the highs, low, and the close.
You will check the volume to see if the move is actually real. And you will look at momentum indicators, like the RSI, to see if the spring is compressed.
You'll be looking for the mechanical proof that the smart money has reversed the flow of capital.
Absolutely. But before we wrap up, I want to leave you with one final, highly provocative puzzle to ponder on your own.
Oh, this is the best part.
Because the chart we explore today is a perfect historical record of what happened. We know with structural certainty that a massive, high-volume reversal occurred on March 6th.
The tape doesn't lie.
It doesn't. But a technical chart never tells you why.
It only shows you the execution.
Right. So what kind of real-world catalyst could cause this? What happened off the tape on the evening of March 5th?
Was it a news leak?
A sudden shift in their technology, a hidden realization by institutional funds.
Something caused thousands of people to simultaneously decide that a stock they had been aggressively selling for 6 months was suddenly the most important thing to buy today.
The chart proves they knew something massive. But the fundamental mystery behind that 9.8 million share trigger, that is a puzzle waiting for you to uncover.